Hey guys, and welcome back to the channel. Today we're going to talk credit cards. They can be good for you and make your life a lot easier, or they can make your life a lot more difficult. It all comes down to choosing the right card for you and then using it properly. We're going to have a look at the different types of cards, choosing the right card for you, and making sure you get the best value for money. Before we talk cards, let's have a look at a couple things that you need to actually get yourself a credit card. Firstly, some sort of credit history, preferably positive, will make it a lot easier. The better your score, the more likely you are to get approved for your credit card. Having a bad credit score, or perhaps no credit score, doesn't actually mean you can't get a credit card. It just significantly reduces the options that will be made available to you. These options will generally come in student credit cards, no annual fee credit cards, or even secured credit cards. Student cards are generally targeting university students and are a low or no fee option. They also generally have lower interest rates. Secured credit cards act much like a secured personal loan, where you will need money in your account that is equal to the credit limit on the card. In addition to a decent credit history or credit score, you'll also need a steady income history. This will make it significantly easier to get a credit card. A patchy income history or lots of smaller jobs can have a negative impact on your application simply because the banks want to be confident you're going to be able to pay back the money that you borrow. And with those two things out of the way, let's get stuck into looking at the different types of cards and different things to look for when you are applying for your credit card. To make sure we cover off the main points about getting a credit card, we're going to break it into 4 or 5 sections. The first section is type of credit card. First type of card we're looking at is your low rate credit cards. So these cards have a low interest rate, and they might be good if you're likely to not want to pay off your credit balance at the end of each month. So the lower the interest rate, the less you're going to have to pay overall as you pay the card off. Now, these cards also generally don't have any extra features. Their main draw card is simply the low interest rate that they offer. The second type of card is no annual fee cards, and the name for these speaks for itself. They don't charge an annual fee. They may also have a low interest rate, but that's about it. They won't have any extra features. The third type is rewards cards. Now, these cards generally have some sort of rewards program attached where you earn rewards points for every dollar that you spend using the credit card. Depending on the rewards program, these rewards points can generally be redeemed for things like travel credits or flights or hotels or goods or even gift cards. The annual fees for these cards does vary quite a lot, with the higher end of the annual fee scale providing the best quality rewards or the highest earning potential for the rewards. While the higher annual fees do give us better rewards earning potential, they also provide an increased range of features available on the credit card. There's a very big range of rewards credit cards and different rewards programs that are offered, so it's really worthwhile if you're looking at a rewards card to sit down, have a look at what is available, the different programs, how you earn points, and then compare that to how you actually spend, because you need to pick one that is going to fit your spending habits and how you use the card. And these rewards cards, especially the ones with the higher annual fees, are better suited to those frequent or higher spenders and those people that are likely to pay their balance off at the end of each month. The next type of card we're going to talk about is store cards or store credit cards. Now, when you Google these, you're likely to get cards affiliated with big retailers like David Jones or Myers. But the store cards that I'm talking about are the ones that you get when you go and buy furniture or white goods or something similar, and you apply for the 60 months interest-free on your purchases. They are essentially a credit card that you use as a personal loan. As with a personal loan, you have to make minimum repayments at a set frequency to ensure that you pay it off before the interest-free period expires. Generally, these cards also have an annual fee. It's usually quite low, and the features are usually quite low on these cards as well, or the type of features are on the lower end of the scale. These do differ from a personal loan, however, in the way that they still act exactly like a credit card. When you receive it, you will be given a credit limit, And with this credit limit, you can get your furniture or your white goods or whatever it was, and then if there's any limit remaining, you can use that as a credit card. And as you pay off the money you owe, you can continue to use the available balance to then go and buy whatever you want, buy your groceries, your fuel or whatever, and you just pay it off as you would a normal credit card. The next type of card we're going to look at is the premium cards. These cards are packed full of features that, if I'm honest, most people don't need or don't want. In saying that though, some of the features are very handy, such as complimentary travel insurance. The minimum credit limits on these premium cards is generally much higher than the other ones we've talked about, and the maximum credit limits are much higher, and in the case of some extra premium or black cards, they're actually unlimited credit limits. With these premium cards, you can expect the highest annual fees, the best rewards programs, and the best features. It all comes down to whether you're willing to pay the annual fees, whether you're actually able to receive one of these cards, or if you actually need one of these cards. So we've covered the different types of cards, or some of the different types of cards anyway. Now we need to look at interest rates. The interest rate you're happy paying will come down to whether you're likely to be paying off your card at the end of each month. Now, to avoid paying any interest at all and wasting money on interest repayments, I do recommend paying off your card each month, but if you are not going to be doing that, then lower interest rates are going to be better because that's going to reduce the overall amount that you have to pay. There are many different low interest rate cards out there if you're someone who might not be paying off their balance every month. An example of this would be ING's Orange One Classic card. Now, it is only available to ING customers, which just means that you have to apply for a bank account, which is free and easy. In addition to looking at the interest rates, some cards will also offer the ability to pay things off in a payment plan. So it's like setting up a mini loan in your credit card where you will have installments to repay, and the interest rate on those installments will be much lower than your standard interest rate. There is one thing to note with that though, there will be a setup fee, so it's worth just checking what that is, and if you're going to do it, just make sure it's worthwhile and you're not actually going to end up spending more money than you would have just paying it off normally. The third item to look at is the annual fees and also the features that come with that. Annual fees and features generally go hand in hand, where the more you pay for your annual fee, the more features that are included on the card. And as the annual fee increases, the minimum credit limit generally increases. And some features that we might be looking at are complimentary travel insurance, purchase protection, and even a concierge service. The fourth section comes down to, are the rewards worth it? The rewards programs are a great way for the banks and other companies to lure in customers and get them to sign up for the credit cards. It really does pay to have a look into the program and see if you're going to benefit from it. Are your spending habits going to line up with how the program actually works and how the points are given out? Is the rewards card and the rewards program going to make you spend more money than you would normally have spent? Or do the rewards points expire? An example for me would be, I used to have an Amex card that was part of the Qantas rewards program, and it worked really well for us. It suited our spending habits, but when the coronavirus started impacting global travel and even domestic travel, the reward points just weren't worth it. It wasn't worth spending the money or the annual fee to earn those points because I couldn't use them. We've now looked at some different points to consider when buying your cards, so the types of cards, the interest rates, and the rewards. Let's break a few things down and have a look at a few individual points when we go to actually put our application in or select that credit card. If you want to use your credit card for all your purchases, then you need to have one that can be used everywhere. So, for example, Amex cards are great for their rewards programs. You get a lot of rewards points and that works really well. However, they generally aren't able to be used everywhere. So there will be places that charge a higher fee to actually use them when you make a purchase, or they may not accept them at all, which means that you need to be happy with paying more to make your purchases in some places, or also have a second method of payment for when you can't use it at all. If you want to use your credit card in ATMs, are ATMs available for you, or does the credit card provider give you an ATM fee rebate, or are you just happy paying the $2.50 or $3 or whatever the fee happens to be at the time? We've talked fees already, but double check the fees. What's the annual fee? Is the annual fee reduced for 1 year, and then does it increase to the ongoing annual fee? Are there account fees or additional card holder fees? Check all of the fees to make sure that you don't get caught out paying more than you want to or more than you were expecting to. Do you want to use the cash advance feature on the card? If you do, check the fees. How much does it cost? How much can you actually get in advance? What type of customer service do you want? Do you want to be able to go into a bank branch and talk to someone about issues, or are you happy just making a phone call or jumping online and having a chat to someone that way? Because that will then impact the types of credit card companies or banks that you can actually apply with. Do you need the rewards? Does the rewards program work with your style of spending, and is it actually worthwhile for you? Does a particular provider offer features or benefits that are worthwhile for you, and do you want to actually pay to get these features? So before applying for that credit card, make sure you know what you want to use it for, how you intend to use it, and what features or rewards programs are actually right for you. And a very important thing to note is don't go and apply for multiple different credit cards or personal loans or lines of credit or whatever it happens to be at the same time or close together, because that will have a negative impact on your credit score, which will then negatively impact any future applications, whether they be personal loans, credit cards, or mortgages. If you've got any questions or comments, let me know below. If you want some tips on investing in finance, check out my Instagram. Otherwise, see you in the next video. Bye.